Good morning, ladies and gentlemen. It's great to see some familiar faces, so thank you very much. Welcome to the National Bank of Fujairah for our Knowledge Series event. My name is Gavin Quass, and I'll be your host today. This event is part of the NBF knowledge sharing efforts and will run throughout 2023. Today's event is all about trade finance. In today's event, we will speak about various insights, risks, trends, and opportunities in the trade finance field, which is one of the most important parts of the UAE economy. We hope that you will take advantage of today's sessions to interact with other peers and also with our speakers and enjoy the networking session. Without further ado, may I now invite NBF's Deputy CEO, Mr. Adnan Anwar, to share his thoughts with us. Mr. Adnan.
Morning, everyone. Well, thank you for making time today. I can understand and see some impact of vacation has already started, and people have already started traveling. But I know some of the customers are stuck and they wanted to clear certain things in the morning before they join us. Well, the topic trade finance is very close to my heart. You can imagine there could be two reasons, but one very close and specific to NBF. Trade finance is almost more than 60% of our business in some shape and form. But when it comes to the country itself, it's very special. I mean, the UAE is very trade finance focused, and the government general strategy is also to promote. And we have seen in the recent times, trade pacts, CEPA, various developments all contributing towards the trade finance business. So it's important. So we had the privilege to work with ICC and Win O'Brien for more than a decade, and it has been a very constructive and useful journey. So in the recent times, Win has been kind to come to us, and we trained a number of our staff in various sessions. And the feedback was so overwhelming and so positive that we thought that these learnings we should take to our customers as well. We all are part of the trade finance ecosystem, whether bankers, exporters, importers, and we need to make sure that we all are secure. So the emerging trends, what we are seeing in the market, that with these new pacts and agreements, the new markets and routes are evolving. Apart from opportunities, so is the different types of risk, which we need to understand how we manage them. We are also seeing digitalization coming into the trade finance space. So it has started years back with more simpler operational processes, but now AI, blockchain, robotic processes are changing the way trade finance operations is done. In NBF, we have implemented AI technology to review the documentation. That's where we are able to revert back to you faster. And a number of other system implementations are taking place so that we can serve you better. And what we are also beginning to see with the flavor on ESG and sustainable finance, the trade finance is also finding ways how to adopt and embrace ESG. So I think take benefit of Win's presence today and ask through his various case studies as many questions and engagement and benefit as we as a bank have done so. Towards the end, I think I would like to thank for all your support and partnership. Through that, our services in trade finance have been recognized externally in various shape and awards. And I just wish you all have a great day, great learning, and enjoy your day. Thank you very much again. I'll give it back to Gavin to start the formal proceedings, and I think you will introduce Win, Brian. Thank you.
Thank you, Adnan. So I think as Adnan said, we've got a great speaker today. So let's start with our first session of the day, which will be covering the ICC Trade Finance Outlook globally and regionally. And then after the break, we'll cover some case studies, including cases for LCs, SBLCs, and guarantees. Our speaker today, as Adnan mentioned, is Vincent O'Brien. Vincent O'Brien, very wealth of experience. He's the director of ICC UAE, and associate director, Institute of International Banking Law and Practice out of Washington, D.C. Vincent is also a trade facilitation technical consultant, delivering technical trade finance assistance in more than 100 countries for major banks, development institutions, and government organizations. A wealth of experience. Vincent Bryant has also been associated, as we mentioned, with NBF for over a decade, conducting not only training to trade finance staff, but also conducting trade finance training knowledge sessions to corporate customers across Fujairah, Dubai, Sharjah, and Abu Dhabi. Mr. Vincent, if you can join us on stage, that would be great. Thank you.
Thank you, Gavin. That's great. Yes, please.
Thanks so much.
Great. Well, good morning, everyone. How are you feeling this morning? Great. I like to hear you're feeling great, but because that's going to change now, okay? It all goes downhill from now, because now you're going to be listening to an Irishman for nearly 3 hours. So that's going to be a really painful experience. So a little bit about what we're doing today. It's great to be with NBF in good hands. I would actually say in great hands, okay? I would say in the best hands when it comes to international trade and finance. Really, I mean that. But what we're doing today is we're going to look at some trends in trade, but I'm not an economist. I am an optimist but very practical. And we're going to look at some trends in trade. But what we're going to do even more so is we're going to be looking back so we can learn from the past as we go forward. We'll be looking at some real cases, legal cases, disputes, things that have happened in trade that created increased risk. And we will learn some points from these stories on how to avoid risk going forward. So I hope you will find it interesting. You can ask me a question at any time. You can stop me at any time. And as I go through the day today, I will be talking a lot about ICC. I guess I got to promote ICC a little bit. But really, what I'll be promoting is ICC rules of practice. Because ICC rules of practice bring a large amount, not 100%, but a significant amount of certainty in your international trade and finance operations. So it's good to be familiar with the rules, because if you know the rules, you can play the game. If you don't know the rules, you lose the game, okay? So what I'll be doing at the end today is we'll be having a little competition. I'll be asking you 1 or 2 questions, and the answer is going to be a number, because all ICC rules have a number. So you're going to be surprised how many numbers you're going to learn today. So someone is going to win this very beautiful book of ICC rules. You don't look too happy about winning a book of ICC rules, guys or ladies, okay? Okay, you got to look optimistic. But to make it more interesting for you, I've got something else as a second prize, or maybe it should be a first prize. And this is the other prize, okay? Oh, you're smiling now, all right. Okay, you're smiling now. So this other prize is a box of Irish handmade chocolates, okay? Yeah, now you're interested, okay? And could you tell me, these chocolates are made by a certain lady, and her name is on the box. What's her name? Lily O'Brien. So if the name sounds familiar, Lily O'Brien is my first cousin, okay? So remember, in challenging times, we almost must promote the country, Irish chocolates, but number 1, you must promote the family, okay? The family, so don't forget that. So these are our 2 prizes that we will have when we finish. And the way you win the prize is I ask questions, and the answer is going to be a number, okay? So pay attention to numbers. The answer is going to be a number. But I don't want to happen like when we did the last NBF event, okay? It's a while back. We did the knowledge event. I came to the end of the event, and I asked a question about ICC rules, and I asked a question, and the guy at the back shouted, a number. A number. You remember? You have to say the number, okay? 14, 12, 39, 22, etc. So I'll get underway. And with my presentation, it should appear here right now, I hope. Okay. Yeah. Well, while it's coming up, let me just give you a few, oh, we're here now. A few key trends in trade. And today's seminar is really Tales from the Trenches. So after I've done a short introduction, I'll be giving you case studies that have happened in the last few years that I think we will learn a lot from. And I would appreciate your interaction as we go forward in the case studies. But just to get underway. Since trade figures were recorded since the 40s by the World Trade Organization, global trade has grown every year, every single year, until 2008. And in 2008, we had the financial crisis. So it was the first time that trade did not grow year on year. But one or two interesting points is, before the financial crisis, trade was growing in 2007, 2008, 2005, 2006 by just under 10% per annum, globally. Just under 10% per annum. And trade was actually twice the rate of GDP. So trade was the result or created so much development and lifted so many people out of poverty. But of course, then we had the financial crisis, okay? And then we had the commodity crisis. And then we had the trade wars, tariffs, and Trump. Okay? And then, of course, we're just coming out of that, and then we're hit by this pandemic, okay, which pretty much killed trade. And then we're coming out of the pandemic, and of course, now we have more uncertainty than ever in the world. We have the war, special operation, whatever you want to call it, in Ukraine, and it's not looking like it's getting any better. The bright side on the horizon, the very bright thing, was that China was coming out again from the lockdown, and we were going to have a rebound driven by China. And actually there was a little bit of a rebound, but it is not being sustained. It's not being sustained. And of course we're seeing a lot of other pressures on the other side of the world, okay? So what key barriers have we for trade right now? Really, we have uncertainty, we have geopolitical risks at all-time high, okay? We, of course, have the inflation, we have the high interest rates, okay? And so lots of challenges. So as I go through today, I will be dealing with case studies that were a consequence of these challenges and how you can navigate to avoid, I hope, losing money from Tales for the Trenches. Just a few very interesting figures. The trade volume growth in 2022, which was last year, and this is from the WTO, was slower than expected at 2.7%. Now that's volume growth, that's quantity of trade moving around the world, growing at 2.7%, okay? So when we think of trade before the financial crisis at 9 or 10%, this is not really so encouraging, but this is volume of trade. When we look at the value of trade in money terms, well, actually it rose by 12% to 25.3 trillion in 2022. And of course, this is the value, this is money, and of course banks deal with money when they're dealing with trade finance. But again, not particularly encouraging. And then when we look at world merchandise trade projected for 2023, projected to grow by a pretty much anemic 1.7%. Okay? So these rates really are not too encouraging. And of course, it's projected that we'll pick up to 3.2 in 2024. But all these projections seem to go optimistic for next year, but then the next year they're revised down again. But something that is encouraging is the value of world commercial services. Trade increased by 15%, okay? 15%. So when it comes to trade in goods, the growth rate is really, really slow and not that encouraging. But when it comes to services, services are growing significantly. And services that are delivered digitally are growing pretty much at phenomenal rates. So here is world exports and imports. And on the export side, you can see here coming into 2023 that Asia picking up, and this was driven by China. And the trajectory looks like it's going up, but only in the last month it has kind of leveled out and is beginning to go down. When we look at imports on this side, we see some pretty obvious figures. This yellow one here is the CIS countries, including Russia, of course. And since, of course, we have the sanctions, we have the war, and we have a shift in trading patterns, we are seeing that trade is in a pretty challenging place right now. When we look at overall trade in services, it's much more encouraging, but when we look at digitally delivered exports, digital services, this is actually where the biggest growth we're actually seeing. But the only thing is, if it's exports in digital services, well, if it's exports of goods, we have shipping documents, we have bills of lading, okay? We have letters of credit calling for documents. But when it comes to digital services, the commercial letter of credit does not work. It just doesn't work. So we need to be looking to alternative products, which I'll talk about a little bit later. This last slide here is just one that not many people put on screen, but I kind of like it. It relates to commercial flights worldwide. So when we had the COVID, you can see there was a total collapse. But then we came back, and now we pretty much have a recovery in commercial flights to where we were before the pandemic. Now, I'm going to ask you a question. In terms of air freight, because every time we talk about trade, everyone talks about ships and bills of lading. But in terms of air freight, in terms of value of goods right now in the world, what percentage of value will be shipped by air freight? Just have a guess. It doesn't matter who's right or wrong. What might it be? Air freight? Say a percentage. 30%. I can't believe. Exactly. 30%. I think she should get a round of applause, okay? That's amazing. Because usually people say 5 or 10%. But now in terms of value, it's hovering at maybe just a little under 30%, but 30% is actually a real good answer. And this is actually going to continue. But last week I flew to Mongolia. I was in Ulaanbaatar. And then I flew back from Ulaanbaatar to Seoul in Korea, South Korea. But it was very interesting for me. I've done a lot of flying in the last 6 months, but the planes were half full. I came yesterday from Geneva, and I was kind of shocked as well that the plane was half full. So I hope that is not an indication of challenges that are going to come. When we talk about challenges in international trade, it all boils down to something pretty simple. If it's an international trade, there'll be a seller, exporter in one country, there'll be an importer, a buyer in another country. And the challenge, of course, is that both parties are operating in separate countries, separate jurisdictions, separate regulations, thousands of miles apart. So, for example, I have a picture on the screen here, as you can all see. This is a picture of what? I'm just checking you're awake. It's a picture of the world. Okay, you're a very bright person. Wow, that's really good. The world, he got it right. Now, the questions get harder as the day goes on. So when you're looking at a picture of the world, you can actually see that my country here, Ireland, is pretty much in the center of the world. Did you know that? Did you know Ireland is in the center of the world? It's really in the center of the universe, okay? But for example, when you have the exporter, that could be me here in Ireland, and we could have an importer in the UAE. Two separate countries, different regulations, thousands of miles apart, and of course the biggest worry of the parties relates to money. Okay? Relates to money. And all my case studies today will relate to money. So we have the exporter from Ireland and we have the importer here, Miss Serena. She should appear here in the UAE. Now, of course, one of the biggest barriers to trade is when there is uncertainty. whether that's regarding the commercial counterparty, or whether that's regarding country risk, or whether that's regarding other geopolitical factors, fear increases. Okay? Fear increases, and when fear increases, the exporter is afraid to ship because he might not get paid, and the importer is afraid to pay up front because they may not get the goods. Right? So this is the biggest challenge, and this challenge has been around for thousands of years, and it's increasing. Thankfully, to make trade a little bit easier, and I'm watching my time, thankfully to make trade a little bit easier, I mentioned we have ICC rules. And of course, you've heard of a book of rules called Incoterms. But very, very briefly, I'm not going to give you a full lecture on Incoterms. And the full text of the Incoterms is in this book that someone is going to win later on today. So the Incoterms, what are the Incoterms? The Incoterms is a book of rules that came out that from the International Chamber of Commerce, ICC rules for the use of domestic and international trade terms. Now, I wouldn't do this little bit of a lecture only for there's a good case study coming up that involved hundreds of millions of dollars about Incoterms. So otherwise I wouldn't bother you with this boring thing. So when we talk about the Incoterms, international commercial terms, you are all familiar with them to some degree. You're all familiar with EXW, Ex-Works. You've all heard of FOB, yeah? Free on board. You've all heard of, it's so boring, okay? CIF, cost, insurance, and freight. Well, these rules are just so important because they have evolved from customs and practice over hundreds of years. And then the Incoterms were formalized, and remember, numbers are important. The Incoterms were first published in 1936. 36 is a good number, okay? 36, revised 7 times, and the latest version is Incoterms 2020. So what are the rules? Okay, what are the rules? It's a book of rules published in 1936. It's a book of 11 rules that set out the obligations of the seller and the buyer under the international contract of sale. So in every contract, we have a seller in one country, a buyer in another country. And here we have for each of the 11 rules, we have the obligations of the seller, A1 to A10, and then we have the obligations of the buyer, B1 to B10. So depending on the Incoterm you pick in your contract, whether it's FOB, free on board, okay, it will tell us, A2 will tell us when the seller has delivered the goods contractually, and B2 will tell us when the buyer has taken delivery of the goods. So for example, I'm the seller in Ireland, you're the buyer in Dubai. You ask me for a price. I give you an FOB price, okay? Somehow the goods got damaged on the way from Dublin port to Jebel Ali port. So the question will happen, when did I deliver the goods contractually and legally? And when did the risk transfer to you? Now, we could argue about this forever, but we don't argue because we have a rule book. And under FOB, the goods are delivered once they are placed. Can anyone tell me? When does the seller deliver the goods? Oh, sure, that's it. It's a pretty easy one. FOB, free on board. Once the goods are delivered on board the vessel, they're contractually delivered. So you're in UAE, I'm in Ireland. The goods were delivered in Ireland at Dublin port. Once shipped on board, under the rule book, the risk transfers to you at Dublin port. So I hope you have the goods insured, okay? Now, I'll just move on a little bit. As we said, we have 11 rules. First published in 1936, and here are our 11 rules, and you'll be familiar with them. Each one comprises of 3 letters, EXW, FCA, FOB. In the Incoterms new rules, Incoterms 2020, there was one new rule, DPU, in 2020. And let me tell you, when the book was launched again in 2020, hundreds of thousands of copies of the book were sold by the ICC, but very few people were using DPU, this new rule, delivered at place unloaded. But as we know, major international events tend to change practice. And my first case study coming up in a little bit of time will be a major international event that changed practice. So, of course, risks happen. You know, this little story here is a story where, a very short story, we had an exporter in Germany that was exporting to the United States. And the exporter was shipping an MRI machine, which is a body scanning, magnetic resonance, I don't know, something, okay, machine, worth $7 million from Germany to United States. The Incoterm was CIF, remember, one of the 11, cost, insurance, and what does the F stand for? Freight, you all know, okay? See, these are so boring until something goes wrong. So the Incoterm was CIF. The German company loaded the goods on board the vessel in Hamburg. The MRI machine was in this container, and you can see the container door has opened, and the machine slipped out and went into the water. You shouldn't be smiling. It's a sad story, okay? It's not a happy story, okay? So the machine goes into the water, okay? So the seller has in his hand the bills of lading, because the goods were shipped on board. He has the bills of lading, and this I'm making up for a bit of drama. He's looking at this, oh my gosh, what's going to happen? So my question for you is, if we were going to argue about whose risk is it, we would be arguing forever. We would be in court forever. One lawyer saying this, another one interpreting it this way. But because we have a rule, you can tell me the answer. Under CIF, and this has happened, the seller has the bills of lading in his hand, shipped on board, shipped clean on board. Whose risk is it, sellers or buyers? Wonderful. Everyone said the buyer. But you know, that sounds a bit illogical. You know, CIF New York, and this happened in Hamburg, but your answer is correct. Your answer is 100% correct because it's in the rules. So in this case, the buyer in the United States did not pay. The German company, and German companies tend to know the rules, sued the buyer in New York court. The case was solved in 1 day, which is very unusual, because the judge said, guys, what are you doing here? The answer is in the rule book you agreed to include in your contract. Under CIF, the goods are delivered when placed on board the vessel at port of shipment. Under CIF, risk transfers once the goods cross the ships, are placed on board the vessel as evidenced by the bills of lading. And of course, the bills of lading must be clean, but that's another factor. That just means no clause or notation indicating defective condition of the goods or the packaging. So let's move on just a little bit. So that's the contract. We have the Incoterms rules, 11 rules, and there was one new rule. What was the new one? DP? Okay, you've learned something new. You've learned DPU. Okay, good. So in a few minutes, we'll see why DPU has now become so important. But really, this seller and the buyer, you know, one of the biggest concerns is the money, okay? As an exporter, I don't want to ship my goods to, well, UAE is a pretty easy market. But, you know, this Irish exporter could be exporting to wherever. He could be exporting to Czech Republic, Hungary, you know, South Korea, India, Pakistan, Vietnam, whatever, okay? The importer is buying. So the exporter is always nervous about getting paid. Because if he puts these goods on board the ship or the plane, they're gone. They're gone. They've left his jurisdiction. So, but if you want to get paid in advance, well, this lady here is not going to pay this Irishman in advance, okay? Because, I don't know, you know this guy? Would you trust him? No? What do you mean, no? You're supposed to say yes, okay? As the seminar goes on, it's okay to say no, but at the beginning you're supposed to say, yes, I trust him with my life, okay? Okay. So this is a challenge, okay? So basically, the exporter is concerned about payment risk and export finance. The importer is concerned about performance risk, that the seller will ship the right goods, the right quality, the right specification, and that they will be shipped on time. Good news, well, I'm giving you the good news now. Later on, we have the bad news, okay? The good news is there is another book of rules governing letters of credit that are issued by a bank in one jurisdiction or one country to a beneficiary in another jurisdiction or in another country. So we have a rule book. And that book of rules is called the UCP. UCP. I can see you know what the UCP is. What does UCP stand for? Wow, wonderful. Uniform Customs and Practice. Okay? UCP also means you can pay. Or if you don't get your money, UCP can mean you can pray. Okay? Okay. So the UCP is another book of rules of ICC, which is also in our book here today. Okay? The Uniform Custom and Practice. And it's a book of 39 rules. Okay? And remember, numbers are important, whether you like books or you like chocolates. Okay? 39 rules. So why is it important? Now, when we look at the case studies, you'll see how important it is. For now, I know it's a little bit boring, but bear with me. I'll only be about another 10 minutes giving you this boring information. The UCP is a very important book of rules, 39 rules, because every commercial letter of credit issued by every bank every day in every country is issued subject to the rule book. UCP 600, this little book of rules. It's only 39 rules. So I'm telling you, you need to know these rules. So for example, this is my friend Mr. Zhu from Bank of China in Beijing. And you can see he has his UCP book with him. Because he's head of import letters of credit, Bank of China. One of the biggest issuers of letters of credit in the world. Every commercial letter of credit issued by Bank of China states applicable rules, UCP latest version, and the latest version is UCP 600, a book of 39 rules. So every country, every bank, every day. So here we have the exporter in Ireland, we have the importer here in the UAE. And as I said, we have the trade facilitation rules of ICC, and this is the UCP rules, a book of 39 rules. UCP was first published in 1933, and the latest version is UCP 600. So why is this important? 1933 is a pretty long time ago. So when there has been disputes with letters of credit, settled either in arbitration or in court, the judges have consistently supported the rules. So to determine the result, they say, what does the rule book say? And whatever the rule book says, it applies because they were the applicable rules under the letter of credit. Let's get a little bit practical, and I will only be about another 10 minutes, and then I do a case study. Is that okay? I hope, is it reasonably interesting? Oh, reasonably. So reasonably is a good word. If I say, is it interesting, someone would say, nah, not really, okay? But I say, is it reasonably interesting? Everyone says, yeah, it's reasonably interesting. Okay, good word. Okay. Here is the exporter concerned about the payment risk. I'm nervous about putting my goods on board a ship or a plane and sending them wherever, okay? Sending them to the UAE, sending them to Ukraine. Wow, that'd be really risky, okay? Sending them to Pakistan, sending them to India, any country, New Zealand. I'm not picking on anyone. So I'm very nervous, so I'd like to get my money in advance. But you know, if you want to get your money in advance, you don't sell anything, or you don't sell much, unless your product is absolutely amazing. But then on the other hand, the importer, as we saw, is concerned about performance risk. That O'Brien, the exporter, will ship the right goods, the right quality, the right specification, and ship them on time. So that's why we have letters of credit, subject to international rules, UCP 600. So the letter of credit will provide a bridge between the seller and the buyer, in that a bank or banks will undertake to pay the seller, provided the seller what? This exporter will get his money, provided he... Very good, okay. Someone had said ships here, but that's a good answer. Provided the seller ships, but more correctly, presents documents which evidence the performance. Bills of lading from the carrier, evidencing shipment. Insurance from the insurer, evidencing insurance. Maybe the goods had to be inspected, maybe not, but if yes, pre-shipment inspection certificate. So when I look at this letter of credit, time and dates become important, and I'm mentioning this because it comes up in the case studies, otherwise I wouldn't bother, it'd be too boring. So what dates are important under letters of credit? What dates? That's really important. The latest date of shipment, because this is a performance variable. The exporter must ship his goods, and the transport document must evidence shipments on or before. Wonderful. What other date is really important? Expiry date. Okay? Expiry date. So the expiry date and place is the last day for presentation of documents. Okay, quick question. You've shipped your goods for $10 million. You're preparing the documents, and you present the letter of credit expires on the 30th of September, right? 30 September. You present your documents on the 1st of October. Has the bank any obligation to pay you? Let's be very blunt about it, because that's what we're about today. Zero. Okay? Zero. Like any logical person would say, well, it's only one day. Latest shipment date was 9 September. We shipped on the 10th. And it takes 3 weeks for the goods to get there. 1 day makes no difference. Bank has no obligation to pay you. Zero. Okay? There's a difference in the weight between the packing list and the bill of lading. It's a full shipment, and there's a difference in the weight of 50 kilos in the documents. Is this a discrepancy? Yes. If it's a discrepancy, it doesn't matter whether it's small or big. It's a discrepancy. Has the bank an obligation to pay you? No. Okay, I'm being very blunt today, because there have been cases in the last 2 or 3 years where parties have escaped their risks for their obligations due to very, very simple things. Okay. When we have the contract will specify the shipment details. The role of the documents is to evidence specific facts or action. These are the typical documents that you would see under a letter of credit. Commercial invoice, Article 18. Insurance documents, Article 28. Transport documents, Article 19 to 23. But don't worry, you don't need to remember. So here we have the exporter. The goods are being shipped, and here he has the documents. The documents are the key to the money. The goods are important, of course, but the documents are the key. The documents are the key. As we said, or you said, the payment triggers on presenting the complying documents. So you see this guy here in the photograph. Do you know him? You know him, yeah? Okay. Do you trust him? Okay. Wow. No, look. Okay. Maybe by the time I'm finished. Maybe the time I'm finished. So let's run through the letter of credit very briefly before our first case study. And we'll be going for a coffee break. It's now 10:20. Latest 10:40. Is that okay? Yeah, you'll survive until then? It's fine. Okay. You don't look too confident. You know, that coffee is looming. Okay. Okay. Here we go. What happens typically is this importer won't pay in advance. So O'Brien says, you must pay in advance. And she says, sorry, I can't pay in advance. It's not me, it's my boss. It's the policy in the company. It's not me, it's my boss. So what have you learned today? No matter what happens, blame your boss, okay? Blame your boss for everything, okay? That's the one thing you've learned today. Okay. It's not me, it's my boss, but it's the policy of the company. We don't pay in advance, Mr. O'Brien, because we know you're a good guy, good company, but we paid in advance before and we never got the goods. Sorry. And then he says, well, we don't ship unless we get paid. But then they have the compromise letter of credit. Typically works by the seller providing the buyer with a pro forma invoice. Seller, buyer, goods description, and the Incoterm. Whether that's FOB, CIF, or the new one, DPU. The buyer looks at the offering, because now it's specific. If they want to buy the goods, they will issue the purchase order. You'd be amazed how much trade is done just on a pro forma invoice and purchase order. Nothing else. Of course, if it's a commodity, there will be a contract, okay? There'll be a contract. So now the pro forma invoice said payment by irrevocable, let's say confirmed letter of credit. Now the importer applies to their bank to issue a letter of credit. Applicant, beneficiary, amount, latest shipment date, expiry date, documents required. It's the same in every country in the world pretty much, okay? Then the bank will take a credit risk on the client and they will issue the letter of credit by SWIFT. So now we have the beneficiary, we have the applicant, we have the issuing bank. The letter of credit is then issued and sent through the Irish bank because I'm in Ireland. And the Irish bank is known as the advising bank. All covered in the rules. Issuing bank's obligation covered in Article 7. Advising bank's role is covered in Article 9. And then we think about the risk. And I'm coming to my case studies very soon, okay? So now O'Brien has not shipped the goods yet, okay? But he has in his hand an irrevocable letter of credit issued by a bank in the UAE. It could be a National Bank of Fujairah, okay? Or it could be issued by a bank in another country, Pakistan, India, Ukraine, wherever, okay? Okay? And of course, there's different risk perspectives there, okay? So let's assume this letter of credit is not confirmed for now, not confirmed. So if it's not confirmed, the exporter, we could say, has removed the commercial risk of the buyer because he's no longer relying on the buyer to pay, he's relying on a bank, the issuing bank. But he's still left with the bank risk in whatever country that is, in a different jurisdiction, but he's still left with the country risk. And that is, and of course UAE, the country risk is really, really low. But another country nearby, the risk is really, really high, okay? So he's left with the country risk. And the country risk is that something could happen in the country that means the importer, the bank cannot pay. It could be lack of foreign exchange reserves. Quite a few countries not too far away are struggling with their foreign exchange reserves right now, okay? It could be that there is geopolitical risk, strikes, riots, civil commotions, or a war. And our case studies will look at all of these a little bit later. So if the exporter wished to cover the commercial risk, the bank risk, and the country risk, what kind of a letter of credit should he look for? Perfect. Irrevocable, confirmed letter of credit. But what does confirmation mean? It's in the rule book. It's in the rule book. And confirmation is covered by Article 8 in the international rules. And confirmation is additional, Article 8, confirmation. Confirmation is additional undertaking of the confirming bank to honour a complying presentation. So exporter is in Ireland, issuing bank may be in UAE, it could be in Pakistan, it could be in Sri Lanka, it could be in Ukraine, it could be wherever, but it's confirmed. For that Irish exporter, if he presents his documents complying, before the expiry date, check the latest shipment date, and they comply, the confirming bank must pay, regardless of anything happening to the importer, the issuing bank, or even the country. Is that okay? Okay. So then one or two key rules, okay, that I just want to cover to make us from my case studies here. And here they are. Oh, here, where is it gone? Yeah, okay. Article 4, a letter of credit, a credit, by its nature is a separate transaction from the sale or other contract on which it may be based. So it's completely separate to the contract. Many people don't realize this. Banks are no way concerned with or bound by such contract, even if any reference is included in the credit. Hard to believe. Banks are no way, okay? And then we have this one you're all familiar with, Article 5. Banks deal with documents, only documents, okay, that's what it should say, yeah. Banks deal with only documents, okay, and not with goods, service, or which the documents relate. And then, of course, a bank has, Article 34, a bank has no liability for the form, sufficiency, accuracy, genuineness, or falsification, or legal effect of any document, okay. I'm going to jump ahead just briefly now for one of my case studies, okay? Are you ready for the case studies? Yeah? Nobody's sleeping yet. Just checking. Yeah, nobody's sleeping yet. Okay, okay. Have you ever seen this ship before? Have you? Yeah, you have. Okay, well, let me tell you something, okay? You see here, I like this ship so much, I have my own. I just love this ship, so I have my own. So can anyone tell me the name of this ship? Very good. This ship is one of the Evergreen line, but the actual name of the ship is the Ever Given. You remember? The Ever Given, Never Forgiven, okay? The Ever Given, Never Forgiven, because this ship was stuck for 6 days. Where was it stuck? In the Suez Canal, and hundreds of millions of dollars were lost, okay? So here is our first case study. But first of all, as you can see, there is a lot of containers on this ship, okay? So how many 20-foot? Now, some containers are 20 foot, some are 40 foot. But my question is, how many 20-foot containers can this ship hold? I mean the real one, not this one, okay? How many 20-foot containers? Guess. Because I'm in trade finance for many, many years. And when this happened, I was asked questions. I had no clue. Honestly, I had no clue. And I got a shock. I got a big shock. How many containers can it hold? 4,000? 2,000? 10,000? 10,000? How many? Guess. How many? 80,000. How much is that? 180,000 containers, okay. Right, like it just shows you interpretation. We've gone from 4,000 containers to 180,000 containers. One of you needs a lot of coffee, but I won't say which one, okay. So, but this ship, it really stunned me. It can hold 22,000 20-foot containers. Wow, I can't believe it. I would have thought like you, maybe 5,000, 7,000 or something. But so I'm wrong. But when it got stuck in the Suez Canal, it was holding about 18,000 20-foot container equivalents. So at the time, the most popular Incoterms were FOB and CIF, okay? And the ship was going from Tianjin port in China up through the Suez Canal and going to Rotterdam, okay? Tianjin to Rotterdam. So many of the contracts were shipped were FOB or CIF. So some of the shipments for FOB got stuck in the Suez Canal. And when they got stuck in the Suez Canal, some of the goods were totally destroyed, got damaged. And then, of course, many of the buyers said, we're not paying. We're not paying till we get the goods in Rotterdam. We're not paying. But of course, under FOB, when are the goods delivered? Shipped on board, port of shipment. Now, the tricky one was CIF. Under CIF, when are the goods delivered? Same. Very good. You guys are really sharp. Once the goods are placed on board. So in many cases, the buyer is unhappy, but the goods were actually shipped on board in Tianjin port in China. But of course, CIF, what does I stand for? Insurance. But of course, what happened was, in many cases, the claims were paid, but in many other cases, the claims were not paid because the insurance wasn't taken out by the buyer who makes the claim under the insurance. It was organized by the seller on minimum terms. So there was a change in practice. So I mentioned with Incoterms, there was a new Incoterm, but nobody was using it. What was it? DPU. So all of a sudden, DPU has become popular because under the DPU Incoterm, the seller is now responsible, shipped on board, but not just shipped on board, until the goods are delivered unloaded at the port of destination. Are you with me? So many buyers who are not so familiar have shifted from FOB, CIF to DPU as a result of this ship. And what's the name of the ship? Ever Given? Never Forgiven. Okay, don't forget. Okay. So, can we do one more case study and then we have a coffee break? Short one? Is that okay? Yeah? Because then we'll feel we're making progress. I hope that was a little bit interesting. Okay. I told you a little while ago that last week I was in what country? Mongolia. And part of my visit was due to this, okay? So here's the story, so you can be aware to take care. Okay. As you know, when parties sign a new contract, a big contract, everybody is kind of happy, okay, at the beginning. New big contract, taking photographs, sometimes cutting a ribbon, something starting the contract. But when contracts go on, sometimes they're like a romantic story, okay? After a while, the relationship is not quite as good as it was in the beginning. So here's the case study. Big buyer in Mongolia, so Mongolia. And you know where Mongolia is? It's in Central Asia. It has only 2 neighbors. Who are the 2 neighbors? Russia, yeah, China and Russia. So it's an exciting place to live, okay? An exciting neighborhood, okay? And it's landlocked, okay? So big buyer in Mongolia is contracting with large construction contractor from foreign country to develop coal mine, contract value 50 million. So there's a contractor from one of these 2 countries, okay? And you can guess which one. It's going to come to Mongolia to help them develop a coal mine. Because in Mongolia, they have lots and lots of coal. Actually, they have lots and lots of gold as well, okay? And rare earth metals, but the mining infrastructure isn't developed. So the contract is valued 50 million. So the contractor from big country, very big country, says to the Mongolians, we need an advance payment of 10% of the contract value, which is $5 million. And the Mongolians are very keen, and they say, okay, we will pay you, big contractor, $5 million in advance before you do anything, okay? But we will only give you the money provided your bank, which must be a top-rated bank, give us what's called an advance payment guarantee. Are you with me? So the idea will be that the Mongolians get the advance payment guarantee, they have it, they've already got it, which means that if they want to get their money back, they can claim, okay? So then they send the $5 million, and everybody is, yes, what's the word? Happy. So everyone is happy, okay? So here's what happened. The contractor had to provide advance payment standby LC, but it doesn't matter. So a very large bank in contractor's country issues irrevocable advance payment standby in favor of the buyer. Everybody happy. Okay. Now, when you read the standby LC or the guarantee, most companies, well, maybe not you, but many, many companies, did we get the guarantee? And Mary or Elizabeth or Serena replied, yes, we got it. Okay, good, pay the money, okay? Well, this is what happened. The standby LC had an operative clause. This standby LC only becomes operative on payment of $5 million on account number of contractor with Bank of Agriculture in a certain city in the big country. So the guarantee is issued, but it says it's not operative. And it will only become operative once the money is paid. Once it's paid onto a certain account number in a certain bank. So this is a second word of caution for you. Here's what happened. The guarantee arrived in the Mongolian company. Everyone is kind of relaxed at the beginning of the contract. A very nice lady in the office, her name was Namulin, goes to her boss and says, oh, we have got an invoice from the contractor for the advance payment, $5 million. Should we pay the $5 million? And he said, oh, did we get the guarantee? And she said, oh, yeah, we got the guarantee. When does it expire? And she said, not for nearly a year. He said, okay, pay the money. So the Mongolian company pays the $5 million to the contractor. And I see 1 or 2 people nodding in the audience because you already know what happened, okay? Okay? So they paid the $5 million, bank transfer. The contract starts. For a few months, everybody happy. Then there's a delay with the contract. The buyer, the contractor, the company in Mongolia is not happy. The ministry, they're telling the contractor, fix the contract, speed up, but no fix, no speed up. And then they say, listen, if you don't get this sorted out in 30 days, we're claiming the $5 million under the guarantee. Nothing happens. Nothing happens. So then eventually the Mongolians claim under the guarantee. They sent the claim to the guarantor in big country, big bank, top-rated bank, top-rated bank. So what happened was, when the top-rated bank got the claim, they replied politely and said, we acknowledge receipt of your claim under the guarantee. However, we have no obligation to pay. And why? What was the next line? Why had they no obligation to pay? And they had no obligation to pay. This is a real tough story for the Mongolians. Why had they no obligation to pay? Very good, very good, very good, very good. This is what happened. At the beginning, when the invoice came and everyone is relaxed, they don't check. When I'm relaxed, I don't check, okay? They didn't check. They paid the 5 million, and they paid the 5 million, but they paid it to a different bank with a different account number. The terms and conditions of the guarantee were that the money should be paid to a specific account number with a specific bank. So I'm in Mongolia last week, and I'm there with a lawyer from another country and local lawyers, and they're arguing with me, are telling me, of course they have to pay. The money was paid, whatever. But honestly, this has been tested so many times. The terms and conditions were not complied with. I told them, as of now, your chances of getting your money is pretty much zero, unless somehow the contract comes back and the parties want to solve the contract. But from the bank, forget it. So check your guarantees, okay? Is that okay? Is it good time for a coffee break, or do you want one more case study? Coffee break, I think, yeah. But let me tell you what the next one is about as well. Okay, the next one I'm going to look at is this one. And then you can think about it. A bank in Georgia issued a letter of credit in favor of a supplier in Southeast Asia, okay? The letter of credit called for the usual documents: invoice, insurance, packing list, full set clean on board, marine bills of lading, okay? When the bank received the documents, and I'll go through the case study in detail, they checked them and they complied. But as it happened, the bills of lading, which looked like they were issued by a very famous shipping company, they also had another set looking exactly the same from a transaction just a few days earlier. So the question was, the documents comply, what will the bank do? Now, from what I said in the morning, if the documents comply, the bank must pay. But that must pay under the rules. So when you come back after the break, I'll tell you the bank contacted me and asked me what should they do. And we're going to discuss this case after the break. Is that okay? And then we move on to political risk. We move on to a case regarding Ukraine. And then we come on to a case, very famous case, regarding the oil trade in Singapore, regarding one of the largest trading companies in the world. So they're getting, I think, more interesting as we go, I hope. Is that okay? Interesting? Yeah? Okay, great. Okay, we'll have a break, and it's 18 minutes to 11. We'll be back. We'll start sharp at 11. You know, we could say 15 minutes, but you won't be back. But we'll start sharp at 11 o'clock. Is that okay? And don't forget, numbers are important. What's your favorite number? 11 is a good number, yeah? What's yours? 7? Okay, 7 is a good number. 39, yeah? And Incoterms were first published in what year? 19? Oh, 36? Wow. Could be any of these numbers. Okay, okay. So let's have a coffee break, and we'll see you at 11 o'clock.
Come back, and then we'll get going again in a minute. Back, everyone. Hope you enjoyed your break. Obviously, got your energy levels back up. Obviously, I think Vin's doing a great job in keeping it very engaging. So obviously, Vin's going to go through the next case study. But in this next session as well, we'll be covering some other case studies. I think they'll be including LCs, SBLCs, and guarantees. So I'd like to welcome Vin back up as well. Thank you very much.
Well, welcome back, everyone. How was your break? Good. Too short, maybe. But short is good, you know. I'm very short and I'm very good, okay? So, as you know. Okay, so I'm going to continue with a few cases, but before I do, I had a few questions at the break, and I might try and answer one or two of them. One was regarding the Incoterms. I mentioned that there are 11 Incoterms, and of course I mentioned DPU in a fair amount of detail, okay? Delivered at place, unloaded. So the question was, what's the difference really between DPU and DDP? Okay, so these are two Incoterms, okay? DPU, delivered at place unloaded. This means the seller must deliver the goods to a designated named place unloaded. But under DPU, the buyer is responsible for all import duties, clearance, and taxes, and any local delivery after that point. Are you with me? DPU, delivered to the place unloaded, but in all cases, the buyer is responsible for import duty, clearance, and taxes. DDP, on the other hand, while it's quite similar, it's just the exporter has a little bit more obligation. Under DDP, delivered duty paid, the seller has delivered the goods to the buyer, usually against a proof of delivery, but it includes all duties, taxes, etc. But if there are no duties or taxes, there are no duties and taxes. But if in that jurisdiction there are duties and taxes, they are clearly under the rules, the responsibility of the seller. Is that okay? Yeah, okay, okay. Next question I was asked, and I forgot to mention it actually, was when I'm talking about the documents are presented to the bank and the bank checks the documents, and I should have mentioned it, within the UCP rules, there's a specific maximum period of time for the bank to examine the documents and determine if they comply. I forgot to mention it. Can anyone help me out and tell me under UCP what's the maximum number of days under the rules for the bank to check the documents? 5 days. 5 what kind of days? Working? Banking, okay. Banking and working, I don't really know the difference, but in the rule book it's banking. 5 banking days. So that brings me to this gentleman's question here, which is a very good question. He told me that he's exporting to a certain country in North Africa for maybe 10 years. 10 years? 10 years. And he's using confirmed letters of credit, okay? And he's telling me that the confirmation fees are quite expensive, okay? I guess they are, okay? But he asked me a very interesting question. He said under one of these letters of credit, he's doing it for years, kind of similar letter of credit again, and again, but the amounts are going up. So that means your business is going up. Congratulations. So here was his question. He presented documents to a confirming bank, and I said, before expiry, and he said, yes, okay, so before expiry. And the bank never replied to him. And the documents then were sent to the issuing bank, and when the issuing bank checked the documents, they refused them due to discrepancies. Okay? And I said, are the documents really discrepant? He said, I think so, okay, but I haven't looked at them, okay? So the question he asked me, what's the confirming bank's obligation? The documents were presented to confirming bank before expiry, but the bank never replied to them. They comply, they don't comply, nothing. They went to the issuing bank, correct? They went to the issuing bank. They refused the documents. What's the confirming bank's obligation? This is if you only came for this one question, it was worth your while coming today, okay? What is the confirming bank's obligation? Must they pay? Now, the documents don't comply. Let's assume they don't comply. Very good point. So let's put all of these together. Okay. Because I haven't seen, but if the documents were presented before expiry to the confirming bank did not refuse them by the close of the 5th banking day, right? No? Okay. And if then they were sent by courier, that'll take 2 or 3 days to the issuing bank. And then, as you told me, the issuing bank checked them and they refused them on the 5th banking day. Well, the good news for you, if it's exactly as you said, is the confirming bank is precluded from claiming, this means stopped, not allowed. But the word in the rule book is precluded. The confirming bank is precluded, is stopped, not allowed to claim that the documents do not comply. So if the facts are as you've stated, the confirming bank has an obligation to pay you. Okay? Remember, they must refuse by the close of the 5th banking day. Now, this preclusion rule only applies to an issuing bank and a confirming bank. So if your bank here was an advising bank, nominated, I don't want to get complicated, but let's just say this preclusion rule, Article 16E, for exciting only applies to a confirming bank or an issuing bank. Is that okay? Okay. So the 5 banking days. The next thing I was asked was, is there a rule in the UCP for the bank checking the documents? And as an exporter, I don't want to oversimplify, but there is. And that is in UCP 600. The rule is called Standard for Examination of Documents. So if as an exporter, you know the standard the bank is using, well, it's much easier to play the game, okay, or present complying documents. And that is article number 14, Standard for Examination of Documents. Article 14, Standard for Examination of Documents, okay. And then, where is she gone? Yes, there was a question to briefly explain the difference between a commercial letter of credit and a standby. So, sure, this is hard to explain briefly, but let's try. Let's try for 5 minutes. And then I think I've answered all questions. There was something, I think I've answered all. Okay. The difference between a commercial letter of credit and a standby. So far, when I've been talking about letters of credit, remember the pro forma invoice, the purchase order, that's what we call a commercial letter of credit, okay? Commercial letter of credit. For each letter of credit issued, it's expected there will be a shipment of goods, there will be a presentation of documents, and then if there's another order, there'll be another letter of credit, and there'll be another shipment and a presentation of documents. Now, the idea of a standby letter of credit, the main concept you get in the name of it, a standby letter of credit. So the idea is it's a letter of credit that stands by. Okay, I know that's not very clear yet. Stands by, this way or this way, I don't know. Okay, so here's when it's used mostly. Imagine we saw Mr. O'Brien, the Irish exporter, and then there was Serena, I think, here in the UAE, and they did a number of transactions with letters of credit, like we explained. But now let's imagine it's 3 years later. 3 years have passed. They've done many letters of credit. The orders are getting bigger. The business is increasing. Everybody is happy, okay? So Mr. O'Brien and Serena are very happy, okay? Okay. So then it happens that Mr. O'Brien, the Irish exporter, is here in Dubai, and he meets Serena. They're having a cup of coffee, and they're talking about the business. And she says, Vin, business is growing, and it's going good. And Vin says, yeah, I know. You're selling loads of my products in the UAE. It's wonderful. And then she says, but Vin, we're doing business now for 3 years. And I go, yeah. So, we're doing business for 3 years. We like your product, the goods. You like our money, okay? Maybe we don't need these letters of credit anymore. I understand in the beginning, you need the security before you ship. But now we're doing business for 3 years. We even have a warehouse here with some of your product on display. Because when we use the letters of credit every time, we have to apply to a bank. We have to pay the fees for the letter of credit, right? Okay, and then you have to pay fees to your bank. Maybe we can forget them because we're doing business for so long. Right? Because we're doing business for so many years. And then Mr. O'Brien probably would say, well, Serena, I think that's a very good idea. And she goes, really? I said, yeah, but I need to check with my boss. Good man, you got it, you're learning. I need to check with my boss. So I go and I talk to my boss. So I go and I talk to myself because I'm my own boss, okay? So I go and I talk to my boss, and then I come back and I say, Serena, I think it's a very good idea, but my boss, never trust an Irishman, you know that, okay? But my boss said, with the commercial risk, bank risk, my boss is very, he said, maybe we can forget the commercial letters of credit, but what we could do is, instead of a commercial letter of credit for each order, each shipment, because we are trading and we have this high level of trust and relationship, we can operate under standby letter of credit. And Serena said, what? A standby letter of credit? She said, how does it work? Well, it works like this. Instead of you issuing a letter of credit for each shipment, what we're going to do is we're going to look at how much I shipped to you last year. Okay, so we shipped about $5 million. Okay. And depending on the letters of credit, you owed us from $200,000 up to $800,000. Okay. So what we're going to do is, we're going to send the goods directly to you when you order, not through the bank. We're going to send the goods directly to you. We're going to send you the documents, no commercial letters of credit, and you are going to pay us after 90 days, as you do now, under the letter of credit. And she goes, so no letters of credit. I said, well, there will be a standby LC. And she says, for how much? And I said, well, we must agree what the safety net. You know safety net? So we agree a safety net figure. So there's no magic number here. It depends on how much I trust the party, the payment terms. But of course, the importer would like the value of the standby to be as high or as low as possible. Importer. Low, exactly. And of course, the exporter would like it to be as high as possible. But we trust this company. So I said, listen, we will ship to you directly. We will send you the documents directly. You will pay us after 90 days just by bank transfer, okay? But to do this, we need a standby LC for $300,000. And she says, how about $200,000? And I said, maybe $250,000, okay? And she says, no. Okay, so $200,000. So what happens next is we get no more LC because we're trading partners. One standby is issued for $200,000 for 1 year, expiry date 1 year. Sorry, you asked for a short answer, it's too long. But one standby is issued for 12 months for 1 year. I ship the goods to you, I send you the documents, you just pay bank transfer. 90 days. You order, I ship, you pay. You order, I ship, you pay. You order, I ship, you... No pay. So, no pay. So I called Serena. I said, where's the money? And she said, oh, we have... I said, where's the money? She said, we have a technical problem. So remember, if the lights don't work, it's a technical problem. If the plane don't fly, it's a technical problem. If the projector has had problem with your thing, it's a technical problem. I said, what's the technical problem? She said, my boss is out of the office, so we couldn't do the transfer, but we pay next week. And I said, oh, no problem. We're friends. A few days, who cares? But then the next week, if there's no money, the conversation changes. It's Serena, please pay the money. It's not me, it's my boss. Blame your boss for everything, okay? Because if you don't pay, we have no option but to claim under the standby. So most standby letters of credit in the world expire unutilized. So there's never a claim, there's never a payment. The idea is that they're standing by in the event of a default or non-payment. And a very interesting statistic is that now in the world, the value of standby letters of credit outstanding, standbys, is much greater than commercial letters of credit. This change has happened in the last 2 or 3 years. Before that, commercial letters of credit were much higher than standbys, but now commercial letters of credit are slowly but surely going down, but standbys are coming up. That answer was too long. Sorry about that. You forgive me? No? Okay. Okay. So we'll go back to case studies. Yeah? We're ready? Okay. Okay. Now, the next case study might shock you a little bit, okay? There was a bank in Georgia that issued an irrevocable letter of credit available by sight payment with the same bank. Sight payment just means kind of immediate. The bank receives the documents at sight, they examine them because they can see them, and if the documents comply, the bank must pay. So it's presentation, examination, complying, and paying. Okay. The documents were presented to the bank in Georgia, and when the bank in Georgia got the documents, Tbilisi in Georgia, they checked them and they comply. So under UCP, the bank must pay. Okay. But at the same time in the bank in Georgia, they received a documentary collection which included bills of lading. Bills of lading under the documentary collection, and when they're looking at them, wow, they look exactly the same as the bills of lading under the letter of credit. Crazy, okay? But this is what happened. Strange, but true. So then what the bank in Georgia did was they checked with the carrier. So they scanned or took a photo, I'm not sure, of the bill of lading, and they sent it to the carrier in Putty Port in Georgia and said, is this your bill of lading? And the shipping company came back and said, no. It looks like our bill of lading. It's the same color as our bill of lading. It's exactly like our bill of lading, but we never issued this bill of lading. So smart lady in the bank, her name was Nino, she said, can you send me this in writing that the bill of lading is not your bill of lading? So she received this, okay? So now the bank has a little bit of a challenge, okay? This is a short case study. Because the documents presented on their face comply with the letter of credit. So under UCP 600, issuing bank undertaking, article number, what's the number? Number? Divide 14 by 2, and what do you get? Oh, 7, very good. Wow, you're very good, okay. Article 7, the issuing bank must pay. So here's just a practical question for you. Because if the bank pays, $75,000 are gone. Now, the rules are really important. But if the bank pays $75,000 are gone, and most likely are gone to who? What would you call this person? A fraudster? Any other word? Criminal is a good word. Now, most likely, I'm not, like you can never be sure. Most likely, if the bank pays $75,000, the money has gone to a fraudster or a criminal, okay? So on checking with the carrier confirmed in writing that none of the bills of lading were ever issued by the carrier. So what should the bank do right now? So you're in the bank, the documents comply, and you know UCP, banks deal with documents, documents comply, the bank must pay. So what do you think the bank should do? Or then I'll tell you, the bank contacted me and asked me what to do. And I'll tell you what I said what to do. What should the bank do? Pay or not pay? Not pay? Pay? Not pay? 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 Not pay? Now, isn't this funny? We're all in the same room. Like, normally, there's one party in one country, another party in another country, but in the same room, some people are saying pay, and some people are saying not pay. Now, I'm not complaining. I'm just saying it's interesting, okay? So what do you think my answer was? Because they contacted me. What do you think I told them? To pay or not pay? Pay? Not pay? Okay, well, again, most of you are going like this, some of you like this. And we have one guy over here going like this. Okay. Well, my answer was like this. What you need to do is this. You need to send a swift message to the presenting bank and tell them, honestly, you have received the documents. Now, there was no confirming bank. It's just the issuing bank. You have received the documents. You have examined them. And they comply. And under the UCP 600... Article 7, we have an obligation to pay. So it's not unclear. You're telling them, we got them, we checked them, and under the rules, we have an obligation to pay. So you're not messing. And then you say, however, there is a technical problem. However, there is a technical problem regarding the originality of the bills of lading, which we are investigating, and we hope it will be resolved in the next day or two. And then, all being resolved, we will be effecting payment as per our obligation under UCP. Okay? And then you got to say kind regards. Okay? If it's over 50,000, you have to say kind regards. If it's over 100,000, you have to say with very best regards. Don't forget that. That's really important. Okay. So here's what happened. The bank said, okay, but what about UCP? I said, it's okay. I said, honestly, you got to think about the implications of your actions. If you pay the $75,000 now, you probably are paying a criminal $75,000. Okay? Maybe not. I said, maybe there's a mistake, okay? So what we do is you debit the account of the applicant, you put the money in a suspense account, you send the message, and they sent the message. So what do you think? From the presenting bank, did they get many, many messages saying, you must pay UCP, you must pay? Or did they hear nothing? Was it silence or reaction? Silence, okay? It was very interesting. The bank expected problems from the other side, but I've been doing this business so long, they heard nothing. Because what happened was the fraudster, you used the word fraudster, the fraudster knew that the game was up and disappeared pretty much. Did not follow up on the money. Now, it is possible that this could have been wrong. It could have been a mistake, okay? And maybe 10 days later, it was genuine, there was all wrong information. Well, the worst thing that happens then is you have to say, I'm sorry. Sorry we could not pay. Here is the money. We pay you some extra interest, but you're avoiding paying the money to a criminal. Is that okay? Okay. Now, I have a very interesting case. I'm going to jump ahead to this one. Okay, timing-wise. Force majeure. Two people have asked me about force majeure, and I want you to answer this question, okay? And this is what the question was asked, okay? You are an exporter. You have a letter of credit in your favor for $10 million. And let's say it's confirmed to make it more exciting. But even if not, you have the letter of credit in your favor. And it's expiring on the 30th of September. Okay? Expiry date on the 30th of September. Okay? And the question was, what if there was a tsunami? Okay, but it could be anything. What if some major event has to happen? What if COVID happened and the couriers are not working? Okay? What if the COVID happened and the couriers, the question was tsunami, but you're making me think. What if COVID happened again and you were not able to present your documents before the letter of credit expired? Now, this is a really important, a really good question, What if you could not present your documents before the credit expired? What is your situation as a beneficiary? Has the bank an obligation to pay you? Or does it expire on the expiry date? Honestly, there's an article in UCP, and the name of it is force majeure. But actually, the expectation of people, an intelligent expectation is, due to this unexpected event beyond your control, well, you'll be protected, okay? Expectation. Let me be clear, because your question is very, very good. Under the UCP rules, there is no protection. If you miss the expiry date, remember we talked about it earlier, I said if you don't present by expiry, has the bank an obligation to pay? You all said no. But now we have a force majeure that stopped you presenting by expiry, so you'd probably feel there should be something there to protect you. There's nothing, okay? Under UCP 600, if you have not presented by the expiry date, the letter of credit has expired and the bank has no obligation. So that's a really good question, a really, really good question. So that brings me to my next interesting case study, and nobody's sleeping, which is wonderful, okay? Now, in the next case study, I'm sure people will disagree with me, but that's okay, that's okay. The next one is also about force majeure. Are you ready? Okay, and as I said, all of these case studies have revolved around incidents in the last 2 or 3 years. You know, the ship getting stuck, the Ever Given in the Suez Canal. We had the pandemic, okay, documents, and now here is a really, really interesting case. So for this one, I'm going to slow down a little bit, just a little bit, okay? So here is the story. It's an $11 million question. So put yourself in the shoes of an exporter while I tell you this story. So a European exporter, true story, recent, very recent. Well, obviously, if it's Ukraine, it's within the last year. European exporter shipping goods to Ukraine for almost 4 years. So this is before Ukraine. So he's exporting to Ukraine, okay? And for almost 4 years, 7 successful presentations under letters of credit and payment, under irrevocable confirmed documentary credits. So the importer is in Ukraine. Letters of credit are issued by a Ukrainian bank. The letters of credit are confirmed by a European bank for 4 years. Goods are shipped, documents presented, the money is paid. So everybody is happy. A lot of people are happy today, okay? Everybody is happy, okay. Credits confirmed by big European bank, excellent track record on payments. So big European bank was nominated bank and confirming bank. Just think of the confirming bank, okay. So next thing, the exporter is watching the TV and he's hearing all these stories on CNN, and Putin has his army on the Ukraine border and everybody is saying he won't cross the border. But of course, he crossed the border for a special operation invasion, all-out war. And even today, they're talking about nuclear warheads, but that's another story. Okay. So the exporter is looking at the news. And he has an order, and he has a letter of credit from a Ukrainian bank confirmed by a European bank. So he's getting very nervous, okay, when he's looking at this, the invasion has started. So the exporter is nervous that goods possibly may not be delivered due to situation in Ukraine. So the goods were going from a European port to Odessa. And actually, it's just interesting, no ships have left Odessa in the last 2 days, okay, so it's ominous at the moment, okay. So what is he going to do? Now remember, he has an irrevocable, confirmed letter of credit. So the exporter is nervous that the goods may not be delivered due to situation in Ukraine, but he's thinking, what do I do? Ship or not ship? Maybe not ship due to the situation. But then someone in the company says, yeah, boss, but you know, this machinery is customized for the agricultural sector in Ukraine, for their gauge of machines. If we don't send it to Ukraine, where the heck are we going to send it? What do we do? What do we do? What do we do? Risk. So despite the delivery risk, the exporter still makes shipment. Shipped on board at the port of shipment of approximately $11 million under irrevocable, confirmed documentary credit. And the goods never got there. They never reached the port of discharge. Now, I don't know where they are now, but the goods never got there due to ongoing situation. But at the same time, the documents are presented to the bank. And of course, remember, bills of lading don't show that the goods have arrived. They show that the goods have been shipped. Okay, you all know, okay? So the documents are presented to the confirming bank. The confirming bank, I'm sure, checked them very carefully, okay? $11 million. And then the confirming bank said this. And it's interesting, in March and April last year, there was so much talk in trade finance banks about force majeure, force majeure, force majeure. Anyway, what is a force majeure? What's a force majeure? A war, if it's an unexpected event beyond the control of the counterparties. And I think we could say that Putin crossing the border was unexpected by trading people, okay, and banks, okay. So here's what happened. Never mind the long story. Here's what happened. Documents comply. Beneficiary, whew, that's good news. But then this big European bank, and you all know the bank, they said, sorry, exporter, your documents comply. So under the UCP rules, we have an obligation to pay you because we're a confirming bank. Confirmation Article 8 UCP. And he goes, oh, that's good. And this, however, watch this word, however, okay? However, due to the force majeure, unexpected event beyond our control, beyond your control, we have no obligation to pay. And then the exporter is, you know, the way you think one way for a second and then you think the other way. You're thinking, maybe force majeure, yeah. And then you go, but this is a letter of credit. So my question for you is, and it took lawyers 2 months to come to a conclusion, but there was a conclusion, but you're going to come to a conclusion not in 2 months, in less than 2 minutes. Actually, in 20 seconds, you're going to answer the question, okay? Has the confirming bank an obligation, legally, technically, everything, to pay? Or can they say, sorry, force majeure, no obligation? So must pay or no pay? Must pay? No pay? No pay? Must pay? Must pay? No pay? No pay? Must pay? So the reason I like doing this, even in the one room, it's kind of 50-50. So if we didn't have clear rules, the world of trade would collapse, okay? Because this was settled by reference to the rules. And I was involved in this case as well. So when I visited with the lawyers, this bank, big European bank, okay, we're discussing it, the case, you know, Ukraine, everything. And then I said to the lawyers in the bank, I said, well, you know, force majeure, different people have different ideas, you know. But guys, I said, guys, I'm with you on the force majeure. And they're going, what? I said, yeah, I agree with you that I believe this is a force majeure. And they go, really? I said, yeah. And so now they're kind of happy. I said, but you know, the force majeure, and there was a force majeure, is in the contract. Is in the contract between the seller and the buyer. And remember, your letter of credit is issued subject to a book of rules called UCP 600. A book of how many rules? 39. You guys are fantastic. And remember, one of these rules, Article 4, right? There's force majeure in the contract. The goods could not be delivered as per the contract. But Article 4 of UCP, which applies to your letter of credit, says, credits by their nature are separate transactions from the sales or other contract on which they may be based. The rule goes on to say, banks are no way, I'm beginning to sound like Donald Trump, ain't I, you know? Banks are no way concerned with such contract, even if any reference is included in the credit. So the answer is bank must pay. And the beneficiary got their money. So that's why the rules are so important, and knowing the rules is so important, and someone is going to be lucky to win the rule book a little bit later on. The answer is going to be a number. So, interesting case study. Who is the loser? Well, who is the loser right now? The loser right now is the confirming bank, because the issuing bank, like, you know, remember, they're charging confirmations to cover risk. So they're charging for this year, next year, no problem, okay? But then something goes wrong, and, well, you know, that's it. So the bank, issuing bank, is kaput, basically, okay? Finished, okay? So quite possibly the confirming bank will never get their money. But they charge money to take the risk, a fee, so very rarely they get caught. So, but it shows the value of confirmation. Because at that time, there was so much discussion about force majeure impacting letters of credit. This case finished it, okay? Finished the discussion was over. Okay. Pardon? But you know, there could be, regarding the insurance, regarding the contract, there could be anything, okay? But you're right, there could be. But this has nothing to do with the payment obligation of the confirming bank. But you're right, you are right. You're 100% right, okay? Okay? And actually, this was CIF Odessa. CIF Odessa, but you also know the Incoterms rules. When were the goods delivered? Contractually. Very good. Not when they get to Odessa. Once they are shipped on board the vessel and you have the clean bills of lading. Very good. You guys know what you're talking about. Okay. Now I'll try another case study. Are you ready for one more? Oh, yes, sir. Please. Yeah, this is it's an interesting thing. Imagine if the seller was delivered, the Incoterm was a DPU or DDP. Yeah, imagine. Well, in this case study, it doesn't change, but it's your thinking is great. But regarding the letter of credit, it doesn't make any impact, right? None. Because if the documents comply, the documents comply. So whether the Incoterm is DDU, DDP, you're smart to think about it for the contract, okay? But for the letter of credit, it doesn't make any difference. Yeah. Yeah, but that's the contract.
No, not contract. In the DDU also there is a document saying the shipping company confirmed, the dispatch board shipping company confirmed the goods are reached.
No, I mean, let me put it like this. In this letter of credit, the documents were three original invoices, insurance certificate, packing list, certificate of origin, full set clean on board bills of lading. So these are the only documents in the LC.
If they mention Incoterms as DPU,
Yes.
then they will add one more document.
No, but in this case, the documents complied. So finish on the LC.
Just I will put
Yeah.
it a different way.
Yeah.
Let's say I am the exporter in this situation,
Yeah. Yeah.
and I got the claim from the bank as well against the LC, and since I am holding the insurance in my favor,
Okay.
can I again, like if the shipment didn't reach there, then can I claim again and
Okay, well, let's just answer this very clearly. If the documents comply under the confirmed letter of credit, the bank must pay. That was determined. If then under the contract, okay, forget about the letter of credit now, the money is paid. But if under the contract you had insurance,
yes,
okay, okay. Now, if it was CIF, you take out the insurance. But under CIF, when you take out insurance, you're taking out insurance on behalf of buyer. So buyer could make a claim.
But DDP and the new term which you mentioned,
DPU.
where I am responsible to deliver.
Yes. Yeah, if it was DPU, if it...
Obviously, as an exporter, I will cover my risk of shipment.
Yeah, let's answer that. If it was DP, if this was exactly the same, but the Incoterm was DPU, the answer regarding the letter of credit would be exactly the same. The documents comply, the confirming bank must pay. But under the contract, which is separate, nothing to do with the letter of credit, the seller has an obligation to deliver the goods unloaded in Odessa, for example. So there will be a contractual issue. But you know, if you're arguing a contractual issue, it's always nice to be arguing it if you have something in your hand. If you have what? The money. Okay? So get the money, and then you know you can do lots of flexible things. Okay, all clear? All clear. Now I have another and this is why the rules are so important. Okay. Yes. Oh, that's not part of the case. This is just the case here. Yeah. Okay. 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 Oh, okay. 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 Good question. Okay. So let's rephrase the question, but it's a very good question. Okay. So first of all, I'll ask you, if you're an exporter, letters of credit, for example, letters of credit can be issued to have an expiry date in place at the issuing bank, or they can be issued to have an expiry date in place at the nominated bank in the exporter's country, okay? Number one. So if you're an exporter, which is the best for you? At the counters of the issuing bank or off the counters of your bank, the nominated or confirming bank? Which one? At your bank, it's pretty obvious. Okay, now we get to the question, okay? The letter of credit has an expiry date and place at the issuing bank. You have presented your documents on time to a bank here in the UAE, an advising bank, and they check the documents as a service, and they tell you the documents look okay. Okay? They tell you they look okay. But then the documents are sent to the issuing bank. And when they're on the way to the issuing bank, it may be a holiday in the country. It may be the courier are on strike, okay? It may be whatever. But the documents got to your bank advising before expiry. But now, as it happens, due to holiday, courier, anything, the documents are received by the issuing bank after the expiry date of the letter of credit. Strictly speaking, has the bank any obligation to pay you? The answer is very clear, yes or no? No, 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 and I don't like saying that, but no, 100%, 100%, okay, 100%. And that's the answer, you know, and it's dangerous, it's a big risk. So that's why it's good to be asked these questions. It's a very good question, okay? Any other question on this while we move on? All good? All clear? Okay, okay. Okay, the good news, you'll only have to listen to me for about another 40 minutes, and then we'll have a few questions and answers, and I hope you like this question, okay, this case study. I love this one. Now, this is a tricky one. Presentation by fax. A fax should be as good as an original, I guess, in day-to-day work, okay? Although nobody uses faxes now, but here's the story. A standby letter of credit, which we explained, thanks to your question. A standby letter of credit has been issued for $3 million. And it's issued by a leading US bank. A leading US bank. Now, the standby letter of credit is issued subject to another book of rules called ISP 98, and ISP 98 is also in the book, okay? Okay. But don't worry about this, okay? Don't worry about the name of the rules, okay? So here's what's happening. We have a beneficiary, a seller of goods, who has received a standby LC for $3 million. And they're shipping goods to the buyer, and the buyer is paying, and shipping and paying. Now, I'm making this up, but I think it's what happened, okay? But I'll tell you the facts in a moment. So they're shipping, and the buyer is paying. But next thing, during COVID, there's a shipment, but there's no money. There's no payment. So the beneficiary, what do? They look for the money, but no money. So they claim under the standby. They claim under the standby. So this is what happened here. Demand was made under the standby to the large American bank, and the only one document required was a statement of default stating blah, 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 stating something like the buyer has not honored its payment obligation under contract number 1234 in that it has not paid within 90 days of shipment. Something like that. Don't worry about it. But here's what happened. During the COVID, the beneficiary was not able to present the documents by courier because the couriers aren't working. The expiry date is coming up. What do we do? What do we do? So many companies are not so expert in ISP 98 or UCP. So they decided that they would present the documents by fax. So in the beneficiary's company, they sent a fax to the bank. And they sent the fax to the bank before the expiry date. And the fax said this exactly. We present, and I was involved in this case as well, we present via fax as there is a problem with couriers due to COVID lockdown. Lockdown or lockout? Lockdown. And standby expires tomorrow, right? So we present via fax as there is a problem with couriers due to COVID lockdown and standby expires tomorrow. We hope to submit original statement of default by courier or by hand. So under the UCP rules and the ISP rules, all documents should be original, right? Okay? Should be original, not copies or not facsimile, should be original documents, okay? Original documents. And a statement should be signed, okay. But here's what's happened. Here's what happened. It's coming up to the expiry date tomorrow. Beneficiary has a problem getting the original documents into the bank. They decide, we'll present by fax, okay? So they sent this fax, okay? Beneficiary presented, they presented by fax, and here's what happened. Within the bank, have you a fax machine in your office? You have? No? No? Yes? And some people don't know, okay? You just don't know. I think we have a fax somewhere, but I'm not sure, okay? Some people know, yes, don't know, okay. So here's what happened. This is the lady working in the bank. And she's working in the bank, a very big American bank, and she's walking by the fax machine, and next thing she hears it go tick, 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 tick. And she had not heard this sound for years, okay? There is smoke coming off the machine because it hasn't been used for so many years. So what does she do? She goes over to the fax machine, and she finds that there's a fax on the fax machine, okay? And she takes the paper, 2 pieces of paper. One is the cover message on the fax, and the other is the statement of default fax copy. So she works in the standby guarantee department, so she goes back to her desk, and when she went back to her desk with the fax, what did she do? What does this mean? Oh, yeah. She examined. So she got out the file for the standby LC because she couldn't resist. People in banks can't resist checking. Isn't that right? Yeah. Just they're checking all the time. Check, 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 check. So she gets out the file and she reads the statement of default against the standby. We hereby state that the applicant. So reading it, the words are perfect because it's very simple, okay? Okay, but it's a fax. So she's expecting that the original will come in the afternoon, right? In her mind. So she tells her boss, well, this part I'm making up to add dramatic effect, okay? I don't know is it true. She tells her boss, you're my boss. Oh, he'd be a nice boss. He's a nice guy, okay? She tells her boss, we got a claim by fax for the 3 million. And he goes, oh, and I think we're going to get the originals later. And he said, okay, keep me informed. Yeah, I'll keep you informed. So in the afternoon, she's expecting the courier or someone to arrive and hand in the original. But nobody. The next day, the standby is about to expire. So here's what happened. 12 days after the originals arrive, and she's kind of laughing. We got the originals, you know, it's expired 12 days ago, okay? But then a few days later, there's a call from the beneficiary, and they're saying, we're calling regarding standby letter of credit number for $3 million, and the bank says, okay, hang on a second to get the file. And the bank says, yeah, well, you see, the standby has expired. And the beneficiary said, yeah, under ISP 98, all documents must be original. And we received the original documents 12 days after expiry. And the person on the phone said, yeah, you got the originals 12 days after, okay. But you got our fax. You got our fax before expiry. And the girl in the bank said, yeah, we got your fax before the expiry. And it complies. Well, the wording is okay, but everybody knows, and according to ISP 98, all documents must be original. And the girl on the phone said, yeah, but I don't really care about ISP. I just want $3 million, okay? And the bank said, sorry, but the original documents only came 12 days after expiry. So that's it. So then a little bit later, the lawyers of the beneficiary phoned the bank. And they'd already provided a letter showing they had power of attorney to speak on behalf of the beneficiary. So the lawyers contacted the bank, and they said to the bank, we're calling regarding a letter of credit number, standby for $3 million. And in the bank, they're going, oh, gosh, yeah. Where's the money? And, yeah. Well, you see, let me explain one more time. We received the fax before the expiry date, right? And the lawyer said, yeah, but it complies. No, the wording is correct, but under the ISP 98, all documents must be original. And the lawyer said, oh, they must be original. Yeah, oh, okay, okay, I got that now. And we got the originals, but we didn't get them until 12 days after it had expired. Expired means it's finished. And the lawyer said, okay, yeah, now I get it. Okay, thanks for your help. And by the way, when I rang your bank had a message stating that all telephone conversations are recorded for educational purposes. We also call our conversations for educational purposes. Educational purposes. So then what happened is, a little while later, the beneficiary is suing one of the biggest banks in the United States for $3 million. The bank is very, very relaxed about it. But just a few days before the court case was coming up, they had a meeting, and the bank decided to pay $3 million. And this is the puzzling question. I'm going to ask you, why did the bank decide to pay? Based on the story you've heard, and you heard the answer in a rule a little while ago. Why did the bank made an operational mistake. Why did the bank decide to pay? Pardon? Well, you were kind of on the right track. She acknowledged the facts, but under the rules, the documents must be original to comply. So they don't comply, okay? But good point, okay? Next. Force majeure, no, no. If someone can't, answer a question or something, it's always force majeure, okay? No, not exactly, no. Well, here's what happened. Let me tell you the story. I don't want to keep you in suspense too long, okay? At the meeting, it just shows you how clever lawyers can be so clever, okay? And they did nothing wrong. But at the meeting, we're at the meeting with the bank, and the bank saying, one more time, we got the facts, but you checked it and it complied. Yeah, but it must be an original, and the originals didn't come till 12 days after. So the lawyers then said, so you got the facts, we got the facts. You checked the facts, we checked the facts. So the facts presentation does not comply. The facts presentation does not comply. So we all agree that the presentation does not comply. You say it doesn't comply, now we understand, we say it doesn't comply. Yes, we all agree the presentation does not comply. But under ISP 98, if you receive a presentation and you examine it and it does not comply, you must reject it. No later than the close of the 5th banking day following receipt of the documents. So someone could argue that this is like entrapment because they brought them down a road, okay? But these were the facts. So the bank decided to pay because it was clear they got a presentation, it did not comply. But under the rules, even if it doesn't comply, you must reject it. And if you don't reject it, you must pay. Interesting? Good case? Yeah. I'm going to skip ahead a little bit, but I'll come back in a minute maybe, but I want to cover one case to make sure I cover it regarding sanctions. Oh, I'll do this case as well. Okay. I'll work backwards, okay. As we all know, sanctions are a huge problem, okay, for trade, okay? And interestingly, there has not been many cases in court regarding sanctions. Because when sanctions issues come up, people prefer to sort them out before they get into the public domain, okay? Just they don't want to be connected or associated. But here is a very interesting case from the High Court of the Republic of Singapore, and it's a 22 case. The year 2022. So it's very recent, okay? So I hope you'll find it interesting. Now, this case is in the public domain. If you just Google, it turns up. So it's all, what I show you here is all in the public domain. So it was Cuvera Resources, the plaintiff, who are complaining, the plaintiff, and then the defendant, who are defending their position, was JP Morgan. All in the public domain. So let me tell you the story. A letter of credit was issued by an issuing bank, and it was sent to JP Morgan as advising bank. You're familiar? Issuing bank, advising bank. JP Morgan were requested to add their confirmation. They added their confirmation. UCP 600, confirmation is article number. Confirmation, article number. Oh, wonderful. Wow, you're really smart. Okay. Confirmation article on 8. So JP Morgan added their confirmation to the letter of credit. So the beneficiary received the letter of credit having been confirmed by JP Morgan, and we explained confirmation, article 8. If documents are presented to the confirming bank and the documents comply, the bank must pay. Okay, correct. Okay. But in their confirmation letter, they had added a clause, JP Morgan, okay? And this is JP Morgan in Singapore, okay? JP Morgan in Singapore. And I know I'm not a lawyer, but I'm involved in a lot of these cases as a kind of a practitioner, okay? So on the confirmation letter, saying we add our confirmation right under to this letter of credit, it stated that the bank must comply with all sanctions, embargo, and other laws. This is it exactly, so it's not me telling a story. And law and regulations of the US and of any other, and of other applicable jurisdictions to the extent they do not conflict with such US laws and regulations. Applicable restrictions. Should documents be presented involving any country, entity, vessel, or individual listed in or otherwise subject to any, I don't know who this Annie is, but she's a very interesting lady. She appears everywhere, okay? To any applicable restriction, we shall not be liable for any, there she is again, delay or failure to pay, process, or return such documents. Sorry for reading out that boring paragraph. So the beneficiary, you could be the beneficiary, it could be you could be Convera. You've got the confirmed letter of credit, okay? So after you receive your confirmed letter of credit, what do? What do? Ship, exactly, you ship. So the beneficiary Convera shipped their goods, worth millions of dollars, okay? The goods are shipped and the documents are presented to the confirming bank. And the confirming bank is JP Morgan, okay? So what do JP Morgan do with the documents? They check. Everyone's checking today, okay? They check the documents, and when they check the documents, this is why this is an interesting case, the documents comply. So when the documents comply, under Article 8 of UCP, the confirming bank must pay, okay? But of course, the banks, of course, and they have to, okay? The banks are doing their sanctions checks. Right? They're running all the details of the transaction, the applicant, the beneficiary, the name of the vessel, the port of loading, the port of discharge, the party who has signed the bill of lading, through their compliance program. So when they're running it through their compliance and sanctions program, this is what happened. It turned out that the vessel, pardon? It's very interesting, this. It turned out that the vessel, not exactly the vessel, but exactly. Very good. One of the owners, and there was multiple owners, but one of the owners is on the Syrian sanctions list. Right? You're with me? So the documents comply, bank must pay, but the bills of lading, you know, the carrier, the owner, it turned out that one of the owners is on the Syrian sanctions list. So, of course, what happened, the bank said to the beneficiary, sorry, you know, I don't know what they said, but I'm sure something like this. Sorry, under UCP, we have an obligation to pay, but one of the parties is on the Syrian sanctions list, and if we pay you, we will be doing something illegal, because we will be paying you in breach of the OFAC sanctions. And the beneficiary, like many beneficiaries, would go, what? This is crazy. It's crazy. Like, I just ship my goods from A to B. I'm not dealing with anybody who's in breach of sanctions. I can't know everybody that owns the ship or owns an insurance company or owns whatever. I'm not dealing with anyone who is in breach of sanctions. I'm very careful about it, okay? Okay? So it goes to court, and lawyers are hired, and the case goes on, okay? And the final judgment, what do you think in Singapore? People were thinking different things. Because it's Singapore, maybe the Singapore court will not apply the US law when it comes to a decision. Some people saying no, some people saying yes, and whatever. So the final decision was given in 2022, and what do you think the decision was? That the bank must pay, or that the bank need not pay, or I don't know what words to use, that the bank need not pay due to the sanctions clause in the letter of credit. So, final decision, pay or not pay by the court. Pay? Pay? Not pay? Not pay? Not pay. Okay. You know, if it was 5 years ago, most people would have said pay. The court said to pay. Really, 5 years ago. But the world has changed fundamentally, okay, in terms of compliance and sanctions. So the final judgment was this, the conclusion. And I'm not going to tell you, I'm going to read it, because it's so important that you get it correctly. The judge said, considering the evidence in totality, I am satisfied that if the defendant had paid, who's the defendant? JP Morgan, public domain, okay, if the defendant had paid the plaintiff, the company, against its complying presentation, OFAC would have held that doing so was in breach of the SYSR, and that's the Syrian sanctions under OFAC. In any event, I am also independently satisfied that paying the plaintiff would have been a breach of the Syrian sanctions. The defendant, the bank, is therefore entitled to rely on sanctions clauses as a complete defense to the plaintiff's claim. So basically, somebody is a loser here. Who is the loser? The beneficiary. Yeah, the beneficiary. So I really don't like this. I really find this terrible, you know, for me anyway, you know, because there's one thing if you're dealing with a sanctioned party, you know, okay, you know, but this guy wasn't. It was just that the vessel on which his goods were shipped were partly owned by a sanctioned party, okay. Interesting story? Yeah? Okay. Any question or comment? Interesting? Yeah? Okay, okay. Well, then I'm going to take you to another case, one or two more cases, and then we will be done. Okay, okay. So you're all familiar with bills of lading to some degree. Yes? You're all familiar with a bill of lading. Yeah, you are. Okay. So you're all familiar with bills of lading to some degree. Okay. And I'm sure some of you are more familiar with me. Okay. So when you started working in international trade as an exporter or an importer, or in the bank, for example, okay, we all hear about bills of lading, okay? So do you remember the key features of a bill of lading? You know, we learned it in the beginning. A bill of lading is evidence of contract of carriage. Would you agree with me? Yes, okay. Would you agree with me that when a bill of lading is issued, it's a receipt for goods shipped? When a bill of lading is issued by the carrier or their agent or the owner, would you agree it's a receipt for goods shipped? You would, okay, okay. This is kind of the basic thing we learned in the very beginning doing international trade. Would you agree with me? There's another feature of a bill of lading. There's kind of three things, okay? Receipt for goods shipped, evidence of contract carriage, and there's a third one then. It's a document of... Very good, okay? Very good. So this is really interesting in recent times. So receipt for goods shipped, evidence of contract carriage, and a document of title. So what does the word title mean? Control is a good word, actually, yeah? Any other word? Ownership is a good word. Any other word? Risk, yeah, yeah, these are all good words, okay. Well, let me tell you about an interesting story here, okay, okay. A letter of credit was issued. I'll give you the short version of the story, if that's okay. Is that okay? Yeah, I'll try and explain it. If I'm not clear, just stop me. A letter of credit was issued by OCBC Bank, okay? And the letter of credit was issued in favor of the beneficiary of the letter of credit, okay? The goods are shipped. Okay? When the goods arrived at the port of discharge, the bills of lading were not available. So the goods were released by the carrier against presentation of a certain type of document. Can you tell me what the document was? A letter of indemnity. Wonderful, guys, okay? A letter of indemnity, okay? Now, the bill of lading is a document of title, but the goods were released. The goods were released to the consignee without surrender of a original bill of lading, but released against a LOI, or a letter of indemnity. A letter of indemnity. Okay. So, just one or 2 points. This is from a very famous court case called the Huda. Okay, so it made the point that in default of production of a bill of lading, an indemnity is afforded to the ship owner not on account of its lawfulness of the order to deliver, but so to protect him if he does what he is not contractually obliged to do. So the ship owner or carrier should only release the goods against surrender of an bill of lading. Thank you for helping me. But it very often happens that the bills of lading, for some reason, I won't go into it yet, are not available. So the consignee will give an LOI. But the LOI is just saying, we're holding you harmless for doing something, and I'm going to be very blunt now, that you're not lawfully allowed to do. Because contractually, you should only release the goods against the bill of lading, but I understand you don't have it, so just give me the goods, and should something go wrong, I'll hold you harmless. You're with me? Okay. So to give you this story is just setting the scene. So what happened in this particular case was the bank who issued the letter of credit, OCBC, their customer went bankrupt. So when the customer went bankrupt, they were hoping that they could get the goods and sell the goods and recover some of the money. But at this point in time, the goods are, where are the goods? They're gone. They're taken, they're gone, okay? But they still have something. What have they? They had issued a letter of credit, so what have they now probably in their hand? The bills of lading. So now the bills of lading were presented with the other documents under the letter of credit. So now they are holding the bills of lading in their hand. Like, how good are they? Oh, who knows? Like, the goods are gone, okay? But because they're holding the bills of lading, they have rights. They have rights. Now, in this first case, I'm telling you how good these rights are. Next case, which will be my last case, I'll be telling you how weak they are, okay? So because they're a holder of the bill of lading, okay, it means that the bank, are entitled to take delivery of the goods. But the goods have already been released against the LOI. Good, I repeated this, but you have it. So here's what happened. They sued the carrier. And the name of the vessel was the UU, okay? Okay? So I'll give you the short version of the story, okay? They sued the carrier for the amount of the letter of credit in the Singapore court. But when they sued the carrier was not so nervous because the carrier replied, hang on guys, the bill of lading is already spent. Now spent just means finished, okay? Finished because the goods have already been discharged. So the final judgment of the case by the judge, the final judgment of the case was that the bank was entitled to recover its losses because it was a lawful holder of the bill of lading. Number two, the goods can only be released into the hands of a lawful holder of the bill of lading who is entitled to take delivery of the goods. You, carrier, by releasing the cargo without the bills of lading, you did something unlawful and you must suffer the consequences, okay? Now, I know that story is not so interesting, but it's important for my last case study. Are you ready for the last case study? Yeah? Will you survive one more? Oh, please, question, yeah.
Further it is giving by another party in the trade.
Oh, in this particular case, in all these cases like this, but in this particular case, the cargo had arrived at the port of discharge. The bills of lading are not yet with the issuing bank. This is very common. So the consignee said to the carrier, please release the goods to me. And he is, well, I don't know what he was doing, but that we will give you an LOI, that we will hold you harmless. So the goods were released to the consignee, the importer. But then what happened was the importer's gone bust, gone bankrupt. Okay? Now, if they weren't gone bankrupt, there could be a counterclaim, but they're gone bust, so there's no money. Okay? So then what happens is the bank has paid the LC already, and it has nothing except it's holding the bills of lading. So its next course of action was to sue the carrier. But the carrier replied in court, we have no liability because the bills of lading are already spent. The goods have been discharged. But the court ruled correctly that the lawful holder is entitled to delivery of the goods, and if the carrier unlawfully releases the goods, they must suffer the consequences.
No, but if they have carrier, if I have LOI from the party, from the buyer, or from the supplier in that
From
case,
the buyer, yeah.
buyer will give it to supplier and supplier will give it to the carrier.
No. The consignee gives it to the ship owner or the carrier. That's it. So the consignee is saying to the ship owner, release the cargo to me. And the carrier knows it's not lawful.
No,
but
if this way documentation is completed, in that case still there is risk in this kind of things. If buyer will give LOI to the supplier and supplier, because in this case, suppose if a CIF shipment, everything is arranged by supplier. So now buyer will give LOI to supplier and supplier will give LOI to carrier.
No,
and they will discharge the material.
It'll always be the consignee who gives, the consignee wants release of the cargo, so he gives the LOI to the carrier, but the carrier is not obliged to accept it, but they do, it's the practice, you know. Yeah. Yeah. Okay, this next case is very similar, so it might be useful, okay? It might be useful, okay? So this is a case, Credit Agricole and PPT Energy, again in the public domain, and it's related to bills of lading and letters of credit. So here we go. Okay. On 20th of April 2020, the bank issued a letter of credit in favor of the beneficiary, PPT Energy, PowerPoint, okay? PPT Energy, and the applicant or importer was a company called Zenrock. So the importer is Zenrock, okay? Zenrock, and the beneficiary is PPT, and the issuing bank is Credit Agricole, okay? So when the issuing bank issued the letter of credit, it was for Zenrock to purchase a commodity, which was oil, and the oil was then to be unsold to a company called Tutsa. You're with me? Okay. Okay? So here's what actually happened. The goods were shipped. But the letter of credit provided that the documents presented, which was a CIF shipment, should be invoice, insurance, bills of lading, etc. But it's an oil shipment, and if the documents are not available, the beneficiary may present a commercial invoice and a different LOI. This is a different LOI. It's a letter of indemnity from the beneficiary to the bank, or sometimes to the importer, that the bills of lading are not available, etc., etc. I think this could be the one you're talking about, actually. Oh, it is. Okay, okay, okay. So here's what happened. The documents were presented to the bank. So there was no bills of lading. There was just a commercial invoice and this other type of a letter of indemnity, okay? So when the bank received the documents, and they're checking the documents, like under any letter of credit, when they receive the documents and they're checking the documents, they discover that their customer, Zenrock, had assigned the proceeds they were selling to Tutsa to two banks. So the way they would recover would be the recovery for sale, but they've assigned to two banks, okay? So what happened next was here. The bank has received the documents, and as you already know, how long has a bank to check the documents? 5 days. What kind of days? Banking days. Wonderful. The period of 5 banking days following the date of presentation by the beneficiary, the documents came through Bank of China, but don't worry about Bank of China. It's nothing to do with anything yet, okay? The period of presentation was to finish was Wednesday the 16th of April, and it expired at midnight on Wednesday the 23rd of April 2022. Sorry, 2020. So the period of time for examining is about to expire, and this is to show how important the rules are, okay? So at that time, by that time, the issuing bank suspects fraud as a result of receiving an email from the on-seller stating that their customer, the applicant, appeared to have assigned the proceeds of sale of cargo twice over to different banks, okay? However, at this point in time, the issuing bank did not pay, nor did it issue a notice of refusal. Remember? This is showing you how important this is. So they got the documents, they're checking them, they suspect fraud, right? So when they suspect fraud, they didn't pay, but neither did they reject the documents. You're with me? Okay, you're with me. So what happened next was the beneficiary sued the bank. But the bank, Credit Agricole, they managed to get an injunction stopping payment, temporary. You're with me? They managed to get an injunction stopping payment, and that injunction was later finished or discharged on 13th of November, following the court's suggestion that accommodation should be found between the parties. Okay, so here's what happened, okay? The bank did not pay. There was a court injunction. Then it's in court. And then in court, it was decided that the bank should pay the beneficiary. You're with me? But they will only pay the beneficiary provided the beneficiary provides a guarantee issued by a first-class bank stating that if the court found there was a fraud in the proceedings, the bank could claim under that guarantee to get their money back. Okay, you're with me? Okay, okay. So then there was an investigation of the case, and it was seen that PPT, the beneficiary, had been buying and selling oil. Buying and selling, while the goods are in transit. So sometimes they would buy the goods, oil, when the price is low, and they would sell it at a higher price. But sometimes they would buy the oil at a high price and sell it at a low price. And this was the case that it must be some kind of a fraud, okay? But the judge was a very smart judge, and he said, he said, this is very interesting business. But he said it's not a fraud, okay? He said a company will buy low to sell high. And everybody agrees. But he also said sometimes a company will buy high and they may sell low, but their expectation when they bought high was that the price was going to go higher, okay? Very smart judge. So the final judgment, now this is not me. The last time I did this seminar, someone said to me, is that you? It is not me. Let's just be clear about one thing, okay? That is not me, okay? Okay. So the judge decided that the beneficiary can be hardly an innocent bystander, but it's not a fraudulent scheme. What is required for a sham or a fraud is finding the parties to the sham were dishonest in creating a pretense of a transaction to deceive others when there was really no such transaction. So the bottom line, did the judge decide that the bank must pay or the bank need not pay? Bank must pay, okay? Very good. And why? Why? What was one of the main reasons? It relates to the rules that we talked about. Remember, when they got the documents, they checked them, but they did not pay, and also they did not reject, okay? So that's exactly the answer that was given here, okay? PPT made a compliant presentation of documents to the bank, through Bank of China, it doesn't matter, under the letter of credit on 16th of April. The effects of UCP is that the bank was obliged to accept the documents within the 5 banking days period, but failed to do so. It also failed to give any notice of refusal to pay, and discrepancies replied on, blah, blah. So it gave no notice of refusal. The bank is therefore, by the terms of UCP 600, right? Not the law. By the terms of UCP 600, the court decided that the bank, by the terms of UCP 600, is precluded, is stopped, not allowed, precluded from claiming that the documents did not constitute a complying presentation. So this means the bank must pay, okay? So, my dear friends, I have another interesting case here, but I'm going to go on, and just one very quick one, and ask you a very short This is very short. When we had the special operation in Ukraine and the invasion started, as it happened in my own country, and what's my country? Where do I originally come from? Thailand. Oh, Ireland. Okay, okay. I thought you said Thailand. Okay. So I don't think I look like I come from Thailand. Okay. Maybe I do. Okay. So here's what happened. When the invasion started, there's a lot of very large international leasing companies in Ireland, okay, for tax purposes, okay? So in Russia and the CIS, huge amount of airplanes are leased for flying, okay? So the lease payments are coming in from Russia, okay, are coming in from other CIS countries, but let's say Russia, coming in from CIS countries, okay? So, of course, then there is the sanctions, okay? And then the payments stop coming in. So here is just the wording of a standby I want you to look at and tell me, do you see anything? And this caused a big problem. Such a simple thing. So the lesson is where I started today with the guarantee case is you need to read everything very carefully. So do you see anything wrong with this? Big international bank, we undertake to pay this standby for an amount of $780,000 unconditionally. Unconditionally, well, a little bit problematic because every standby is conditional on presentation, but it's not a big deal, okay? To you, you're the beneficiary against your complying demand, provided it is in compliance with the terms and conditions of this standby, in compliance with the terms and conditions of this standby and the express terms of the leasing agreement, number dated 17th of June 2018. The next paragraph is the important one. Okay? In the event of any conflict between this standby and the leasing agreement, the terms and conditions of the operative leasing agreement will prevail. In the event of any conflict between this standby, oh, misspelling, and the leasing agreement, the terms and conditions of the operative leasing agreement will prevail. This standby expires 30 September, subject to UCP, blah, blah, blah. If you were the beneficiary of this standby, is there anything in that wording you see that it could be problematic? And it was problematic. It was. It meant that the amount, there was a claim, but the bank never paid. What do you see that might be problematic? Conflict? Yeah. Conflict. Okay. Okay. I'll tell you what happened in this case. And, you know, different courts make slightly different decisions. But what happened in this case, there was a claim under the standby. The claim was made under the standby before the expiry date of the standby. So everything you would think should be okay. But the underlying agreement had expired. Right? So the underlying agreement had expired, so the final decision was that it says the underlying agreement will prevail, so it was deemed in turn that the standby already had expired. So would not accept, do not accept anything like this that has a conflicting time or date with, between the contract and the standby letter of credit. Well, guys, I'm going to wrap up now, unless, and I'm going to ask you, have you any questions? Anyone sleeping yet? Nobody? No, you did good, guys. You really did. Nobody sleeping. Any questions? Was it reasonably interesting? After lunch is always the difficult one. Yeah, after lunch is the difficult one. Any questions? Interesting? Okay, well then I think I'm going to have my quiz. Are you ready? Well, first of all, I just want to see what you do remember. The first thing we talked about today was the contract between the seller and the buyer. And I mentioned that there was a book of rules called Incoterms, okay? And I said these are really important because they were around a long time. Incoterms were first published in what year? 1936, wow. The Incoterms were revised how many times? Wow, the Incoterms book comprises of how many rules? 11. Each rule comprises how many letters? 3. Wonderful, okay. There is one new Incoterm which we talked about in detail. What's the new Incoterm? DPU. Wow, you guys are fantastic. Then we moved on and we talked a little bit about the payment terms, okay? And we talked about letters of credit because some of our cases were letters of credit. Now, this is much trickier. So the rule book for letters of credit is called UCP, what number? 600. The UCP 600 is a book of rules. How many rules? 39. Actually, 39 is my age as well, just so you know. What are you laughing at? Okay, so it's a book of 39 rules. So some of these rules are very important, but I'm only going to mention 3. Okay, so the issuing bank undertaking is article number 7. Wonderful. Confirming bank undertaking is article number 8. Wonderful. The ladies are answering all the questions as well as the guys. Okay, okay. And then there was one really important one, but you'll never remember. You'll never remember. And that was standard for examination of documents. Article number. Oh, wonderful. Gosh, you guys are incredible. Okay. So now we're going to have our competition. Okay. So the first one is for the rule book. Okay. Oops, it's a little bit. So I have my rule book here. Are we ready? So today, thank you for your time, first of all. I really appreciate it, and your interaction and your questions. You made my life very easy. So we talked about many rules today, right? And we talked about the Incoterms and the UCP, okay? And the UCP rules were first published in 19... My friend down here at the back, yeah, we'll have to, can I present you with the book? Give him a round of applause. Congratulations. You're very welcome. Okay, we'll shake hands. Yeah, take a picture, yeah. And now, so there's something else. What's the other thing? Oh, the ladies always remember the chocolates, okay? The rule book's not so important, okay? But the chocolates, okay, okay. So then, we talked about standby letters of credit. You remember as well? We talked about 2 or 3 cases with standby letters of credit. And I said standby letters of credit can be issued subject to a book of rules called UCP 600. But very briefly, I mentioned they can be issued by another book of rules called ISP. Okay, the 3 lady, I don't know which are you. Did you hear them? They were in harmony. I said, called 98. Okay, so congratulations, and we will present the chocolates. Give them a round of applause. Okay, thank you very much. Okay, so we're nearly finished. Nearly finished. So I remember I said that standby letter of credit is really useful. Very, very useful. Very good. But there's only one thing better than a standby letter of credit. Only one thing. Only one thing better than a standby letter of credit, and that is a standby box of chocolates, okay? Okay. So the final question, okay? The final question for you is, oh, I didn't even mention it, but I'm going to ask the question. When we talked about Incoterms, we briefly mentioned CIF, which means cost insurance and, oh, that's too easy, okay? But when it's CIF Incoterm, the goods must be insured for a minimum of 100 and, oh, it was a lady's voice here I heard first. Oh, here or here? I don't know. I think it was here. Okay. Right. So we have congratulations. Yes. Great. Okay. So with that, I'm going to hand back to you, unless there's any pressing question. Any final question? All clear? Okay. Well, I just want to thank NBF for having me here today. We hadn't done something like this for a while, so it was a great opportunity to interact with your customers. But really, most of all, I want to thank all of you, because you were really interactive, participating, and you made my life very easy. So until we see you again, thank you very much. Thank you. Thank you.
Thank you, Vincent. I'm sure you'll all agree. Really interesting, obviously exciting, keeps it really energy up as well. So, Vincent, thanks very much. We hope that you found today really useful. Obviously, lunch will be served shortly, so please feel free to stay around, ask any questions, network, and obviously Mr. Vincent will be here to help you answer any of those questions that you may have. We'd love to hear your feedback as well. There's a QR code on each table, so if you're able to scan the code, please provide some feedback on the events. That would be fabulous. Please do keep an eye out for our other upcoming events as part of our knowledge series as we go throughout the rest of the year. Again, thank you very much for today attending, and I'd just like to wish you, obviously, the best for the rest of the day.